welcome to all of you Shiksha 360. And today basically we will discuss chapter number 28, that is basically based on the working capital finance. Very, very important topic for the examination point of view and for your banking career. Okay, because in the banking, basically if you are working in advances sector, you will need to understand these basic terms, clear, these basic terms. So basically we will discuss in this session regarding that you are able to answer the question in the examination also, and it is also helpful in your banking career, clear, like what is the actual meaning of these terms. So let's start our discussion. First of all, we will discuss the concept of the working capital. Clear, what is working capital? Basically we will discuss point by point. So working capital, that is basically if we are doing any business, for the daily business activities, clear, basically for the daily business activities we need funds. Okay, for the daily business activities basically we need funds. That is basically known as the working capital. Clear, that is basically known as the working capital. Clear. So whenever a business enterprise, clear, whenever a business enterprise is started, or we can say that basically whenever a new business is started, some fixed assets, like we want to start a coaching institution. Okay, so first of all we will need a building. After that we will need chairs or benches, and we will need a board, marker. So that are basically considered to be the fixed assets which is required. Okay, so basically whenever a business enterprise is started, some fixed assets like the office, furniture, machines or computers, etc., depending upon the requirement of need, are required. But this alone may not be sufficient for running the business of that enterprise, except for a few activities like broking or commission agent. Clear, like basically for that there is not any other thing required, but for other business, depend upon the business to business, other things are required. Most of the business enterprises, in the course of their business or basically in the duration of their business, has to carry out some current assets, basically in the manufacturing field or in the manufacturing sector. Clear, most of the business enterprises in the course of their business have to carry some current assets like raw material, finished goods, receivables, etc. So the money blocked in these current assets is called the working capital. Clear, the money blocked in these assets basically is called the working capital. Like if you want to manufacture anything, clear, so you need funds. Clear, so you need funds. Clear, so that funds, basically you want to manufacture any new thing, so basically first of all you want raw material, then this raw material is to be processed and further it into the final goods. Clear, so that amount of the capital or amount which is used here, that is basically known as the working capital. Clear, that is basically known as the working capital. We will discuss this complete concept with the help of the example. Why we will discuss here example, sometimes they will ask questions from that also. So let us take an example of an entrepreneur setting up a small manufacturing enterprise. Basically for what? For the manufacturing of polythene bags. Clear, in this session basically we have to discuss one example that is related to the polythene bags. Clear, basically we will discuss the case of the manufacturing of the polythene bags. What are the raw materials required? What is the amount of capital is to be required? All these things we have to discuss here one by one. So he complete. Okay, so let's start once again. Let us take an example of an entrepreneur setting up a small business enterprise for manufacturing of what? Basically for the manufacturing of polythene bags. So he completes the construction of factory. Clear, first of all, basically for the manufacturing of the polythene bags, first of all there is a setup is to be required. This one, that is factory shed, and put up all the plant and machinery there. At this point, if he takes a snapshot of his assets and liabilities, it will be taken as under. Clear, so what is as under? This one, balance sheet, that the firm is ABC Limited. Clear, that the firm is to be ABC Limited as on date 9th of September 2017. Clear, balance sheet as on the date 9th of September 2017. Clear, what it says that? Clear, what the balance sheet says that? Basically in every balance sheet there are two components. First one is the liability, then second one is the assets, and they are to be equal in that. Okay, so here liabilities, first one is the under the liability, this is the asset. And they are mentioning in the lakhs. So liabilities here, it is in the lakhs. So capital is 25 lakh. Long-term liability is 75 lakh. Long-term liability, clear? So capital basically, that is, this capital represent that the amount invested by the entrepreneur in that firm, clear? Entrepreneur in that firm. Clear? Amount invested by the entrepreneur in that firm, that is basically considered to be as the capital here, clear? And that is comes under the liability. Why it comes under the liability? Like if you are starting a new business, and in that total, basically we can say that 100 lakhs we will require for that business. 25 lakh basically you will use your personal income, and 75 lakh basically you will take loan from the bank. So basically in the future, you want that you will take out your money back from the business, clear? You will take back your money from the business. Okay, so that's why basically it is considered as a liability here, clear? So that's why basically it is considered as a liability here, clear? So overall liability here is to be 100 crore, and fixed assets, like you are purchasing the machinery or other things that are comes under the fixed asset, that basically it is comes under the asset category, that is to be 100 crore, clear? So here it is to be 100 crore, here is to be 100. Okay, so that is basically the balance sheet as on 9th of September 2017. Now in the next step, what we have to do? Please tell fast. Up to this much point, it is clear to all of you. Please respond fast, because while discussing the case study, many students, what they will do, basically they will try to cram the concept. That's why I will discuss here. No need to cram, just understand. And if you, at any point you will face issue, you will tell me, I will guide you. Okay, but no need to cram, just understand. These are the very easy topics, clear? Case studies are one of the easy thing in the examination to answer. Okay, now move to the condition. So for running the factory, basically he needs raw material, because he wants to manufacture the polythene granules, clear? Because he wants to manufacture the polythene granules. For that, basically what they will require, basically first of all they will require the raw material, clear? First of all they will require the raw material. So that is the polythene granules, clear? That is the polythene granules they will require. So what they will do now? They will go to the dealer. He goes to the dealer and find out that the rate of granules is rupees 100 per kg, clear? He will go to the dealer, basically which supplies the raw material, clear? And find that the rate of granules is rupees 100 per kg, and the credit of 3 months is available, clear? What is the meaning of that? Credit of 3 months is available. That is, if you buy today, you will do the payment after 3 months, clear? You will do the payment after 3 months. Like in the credit card, you will do the payment after 45 days, clear? This type of thing they are trying to say here. Okay, the credit is available of 3 months. So his requirement is 1000 kg, clear? 1000 kg, that is 1 ton per day, clear? 1000 kg, clear? In 1 ton, that is 1000 kg, clear? And its requirement is 1 ton per day. So he purchases 30 ton of granules, clear? He purchases 30 ton of granules, which is the minimum quantity which the dealer supplies, clear? If you are going to buy raw materials, clear? So basically they will put some condition that this much is the minimum amount which you have to buy, clear? Basically which you have to buy, that is 30 ton. Okay, for 30 ton they will require amount also, or but they will provide here, that is 3-month credit is available, clear? So let's little bit do calculation here. 100 rupees per kg. So 1000 kgs of rupees 1 lakh. 1000 is 1 lakh. That is basically 1 ton is equal to 1 lakh. Please understand. So 30 ton is equal to 30 lakh. Clear? So they give 30 lakh to the dealer after 3 months, clear? The cost of the raw material. Okay. Now what they will do? He starts manufacture of the bags, clear? He will take the raw material now, and on the 10th of September. he starts manufacture of the bags on 10th of September 2017. The process takes very little time. Clear that the manufacturing process basically takes very little time. And on the evening of 10th of September 2017, he has 1 ton of bags with him. Clear, because he need daily 1 ton per day. So basically morning starts manufacturing process, and in the evening basically they will use 1 ton raw material and manufacture bags from that. Okay. In the meanwhile, clear here, first of all, they will pay the raw material cost, but there is also workers, electricity bill, and other expenses are also there. Clear? So he incurs the cost, that is power, labor, transport, miscellaneous expenses, but ignoring depreciation of rupees 10,000 for converting 1 ton of granules into bag. Clear? So how much the cost he has to pay for converting 1 ton of granules basically into bag? Rupees 10,000. And for 30 ton of granules, basically how much they have to pay? Rupees 3 lakh. Clear? 1 ton, they have to pay 10,000. And for 30 ton, they have to pay total 3 lakh. Okay. So please tell fast up to this much point. It is clear to all of you or not? Please respond fast. What is the condition going on? Please understand this thing they have mentioned, basically this thing basically in the case study form, they have mentioned in the points and it leads to the confusion. That's why I'm asking again and again. Please tell fast if you have any doubt, any query till now. Okay. Last line. So basically for 1 ton, they have give expenses that is 10,000. Clear? That is labor, power, transport, and other expenses. Clear? Which they have to bear out. Which they have to bear out here. Now move to the little bit more. So on 10th of September, manufactures bags. So he approaches a wholesale dealer of bags for selling the bags to him. The deal is struck at rupees 1,10,000 per ton. Clear? So 1 ton bags, at which amount he sells basically 1,10,000 per ton. And what is the minimum quantity basically for the selling? But a minimum of 10 tons of bag is to be supplied. Clear? So total amount that is 11 lakh. Total amount here is to be 11 lakh because minimum 10 bags has to be supplied. Clear? Minimum 10 tons of bag has to be supplied, and 1 ton is equal to 1 ton price is 1,10,000. Clear? 1 ton price is 1,10,000, and minimum of 10 tons of bag is to be supplied, that is 11 lakh. As one thing more, as the manufacturer requires 3 months credit period. Clear? As the manufacturer basically gets 3-month credit period from the supplier. Here, the manufacturer also gives 1 month credit period to the purchaser. Clear? Also, credit of 1 month is given to the purchaser. So the enterprise continues to manufacture for 10 days, and on 21st of September 2017, supplies 10 tons of bags by raising an invoice of rupees 11 lakhs payable on 21st of October 2017. Clear? Because on Delhi, they have to manufacture only 1 ton of bags. And for 10 tons of bags, basically they need 10 days. And on 21st of September 2017, they manufacture 10 tons of bags and supply 10 tons of bags. And along with that, raising an invoice of rupees 11 lakhs. That is because 1 ton is equal to rupees 1,10,000. And when they will receive this amount, that is basically after 1 month, that is on 21st of October 2017. Clear? As per the conditions here. Clear? As per the conditions mentioned here. Okay. Hope up to this much point it is clear to all of you whatever we have discussed. Whatever all the points we have discussed here. Please respond fast if you have any doubt, any query. Okay, general things we are discussing here. So the next supply basically will be done after 10 days because the minimum supply is of 10 ton of bag. Clear? The minimum supply is of 10 ton 10 ton of bag. So what they will do now? The next supply basically will be made on 1st of October 2017. So if he takes a snapshot of his assets and liability basically on the evening of 30th September 2017, the picture will be as under. So please consider carefully. There is one error which we will note down here. So balance sheet as of the ABC Limited as on 30th September 2017. Clear? 30th September 2017. What the balance sheet says that? Clear? What the balance sheet says that? That is capital, which is same, that is 25 lakh under the liability. Long-term liability, that is 75 lakh. Next one here, one new term arises, that is amount payable to the supplier, that is 30 lakh. Basically, supplier is basically the person who supplies the raw material and the person basically who gives 3-month credit period. Okay, 3-month credit period. Along with that, they have to pay rupees 2 lakh as on 30th September because they start the manufacturing on 11th of September. Because they start the manufacturing on 11th of September. Clear? Because they start the manufacturing of 11th of September. Sorry, on 10th of September. Clear? On 10th of September. Clear? Because they start the manufacturing on 10th of September. Clear? So for 20 days, how much the labor expenses or other electricity, that is 20 into 10,000, that is 2 lakh. Clear? That is expenses payable. Also comes under the liability. Clear? Also comes under the liability. Clear? And amount receivable, this one they have written here wrong. Amount receivable, that is basically we have supplied goods to the purchaser and from that basically we will get the amount. That is amount receivable basically not come under the liability section. Basically it creates our asset. Clear? It is our asset. That is basically we are giving goods to someone and basically we are getting amount from that. Clear? So that is basically comes under that here. Clear? Amount receivable. Amount receivable, that is basically it becomes our asset. Clear? Amount receivable, it becomes our asset, that is 11 lakh. Clear? It is not comes under the liability portion. Basically it is comes under the asset portion. Clear? Because we will get our money back. Clear? We will get our money back. Why? Because we supplied the goods. So that is becomes our asset. Clear? That is becomes our asset. Clear? So what is the liability total? That is 132 lakh. Clear? 132 lakh. And under the assets, fixed asset initially, raw material, that is 10 ton. Clear? Raw material, that is 10 ton. Because why it is comes under here 10 ton? Okay, raw material 10 ton, work in progress there is not. Finished good 10 ton. Clear? Finished goods also here is to be 10 ton. Raw material, why it say that basically it becomes our asset? Because we purchase 30 ton raw material. Out of that, finished goods of 10 ton available because on 30th September, because we will supply it on 1st of October. That's why they will consider under that raw material is present, available 10 ton, that is here. And 10 ton goods basically we have already supplied, that is basically 11 lakh. Clear? 11 lakh. We have to receive this much amount, this much we have present in our hands, but we will not till now dispatch that goods. Clear? Till now we have not dispatched that goods. So this is comes under the asset. Clear? This is comes under the asset. Okay. So please tell fast if you have any doubt, any query up to this much point. Please respond fast if you have any doubt, any query regarding the understanding of the balance sheet. This is fixed asset. This is raw material which we have available now. Work in progress 0. Finished goods, we have finished goods basically of 10 ton, that is, and that amounts to rupees 11 lakh. Amount receivable, because we have already supplied 10 ton goods on 1st of September. Asset total is not equal to 132 lakh. This is 100 plus 10 plus 11 plus 11. That is 132 lakh. This comes is equal to 132 lakh. Okay. Asset total 100 plus 10 plus 11 plus 11. That is 132 lakh. Okay. So this is the balance sheet, clear? And in the examination, basically they will give these types of questions. Just you have to find that. First of all, they will ask question, what is asset, what is liability, clear? Many of the times they will ask this question. Please, no need to cram anything. Even if you face any issue at any point, please ask, because these are the technical terms and this help you while basically if you are working in the advanced section at that time, basically this help you to also. Okay. Now move to the next session, next point. So here, the amount of the raw material, work in progress and finished good receivables, totaling rupees 32 lakh. Clear? Initially, basically we have 100 lakh. So whatever basically here going on, that is rupees 32 lakh. Clear? Basically 32 lakh is basically going on basically for the manufacturing of the goods. Okay, that is basically termed as the working capital. Clear? That is basically termed as the working capital. Clear? So the amount of raw material, work in progress, finished goods, receivables, basically totaling rupees 32 lakh. That is basically called as the working capital or the current assets. Clear? Working capital or basically the current assets that is basically required. Clear? Is called the working capital or the current assets required to run the enterprise smoothly. Clear? Required to run the enterprise smoothly. So in this example, the entrepreneur has not arranged for any money to run his factory, as his entire requirement of working capital is met through the credit provided by the supplier. Clear? Basically, the person, the manufacturer basically does not require any capital from any other external authorities. Clear? Or we can say that from external. Why? Because they will get all the amount basically from the supplier. Because the supplier will not take any advance money. Supplier basically will not take any money. They will give the time of 3 months. Clear? That is, you have to pay after 3 months. Clear? But in actual, this will not possible. If in the actual, if you are working or basically you are running a business and you want to purchase raw material, if you are purchasing the raw material of 10 lakh, basically at the time of purchase, you have to pay at least 4 to 5 lakh. Clear? You have to pay at least 4 to 5 lakh. Clear? At the initial stage. Clear? So you need funds at that time. Clear? So you need funds at that time. So, but life in business often is not as simple as shown here. It is a fact that current assets are required by almost every enterprise to run the business smoothly. How much of current asset, that is working capital, are required to maintain depends upon the nature of the activity and the market conditions. Clear? Depends upon the nature of the activity and the market conditions. Clear? So working capital financed by the banks, it is nothing but the assessment of total current assets. Clear? But the assessment of the total current assets needed and how this need is to be met. Clear? Basically, what is working capital? That is basically how much amount we will require to running our day-to-day business. Clear? Basically, how much amount basically we will need to require for running our day-to-day business. That is basically known to be as the working capital. Clear? That is basically known to as the working capital. There is nothing, anything other. That is basically known to as the working capital. So how they will get this one? So in the above example, what happens if the credit is not available? Clear? In the above example, what will happen if the credit is not available from the supplier, or the credit is available only for the 10 days? Clear? Or the credit is available only for the 10 days. Clear? For the rest days, they will need the credit. So what they will do? They will visit to the bank. So in such a case, he will approach the bank and request for a working capital loan. Clear? And request for a working capital loan of rupees 32 lakh. Assuming that the bank is convinced about the KYC norms, viability of the project, etc., the bank will assess the needs and sanction an amount. Clear? They will check that what are the assets present to the manufacturers, clear, or available in the hands of the manufacturer, and what are the basically output of that business. Clear? Bank will check all these things, and on the basis of that, clear, how much will that amount be? We will discuss later in the chapter. Basically, in the next session, we will discuss how much amount basically bank will finance and what are the rules and regulations basically bank will check before financing any working capital. But bank will definitely we ask him to bring some of his money either by the way of capital or long-term borrowings like fixed deposit loans from friends and relatives. Clear? That is basically we will consider as the margin. Clear? That is basically we will consider as the margin. Clear? So bank want that if any borrower wants, like basically you are purchasing a car of 40 lakh. So among that, basically bank say that basically we will finance only 75% amount, rest or 80% amount, rest you have to pay. Clear? That is considered to be as the margin. Clear? That is considered to be as the margin. Clear? So this amount, which is intended to meet part of the working capital, clear? This amount, which is intended to meet part of the working capital is called the net working capital. Clear? It is basically called the net working capital. The other part of the working capital will be met by the credit provided by the supplier or other credit available and the bank finance. Clear? The other part of the working capital basically will be met either by the credit provided by the supplier, like here raw material supplier, clear, provides 30 lakh or any other credit available and the bank finance. Clear? And the bank finance. Clear? In short term, we can say that basically the total requirement of the current enterprise of the current assets of an enterprise, the total requirement of current assets of an enterprise basically will be termed as the total or gross working capital. Clear? Total or gross working capital, and it consists of total or gross working capital. Basically, it consists of two parts. It is met by the short-term credit available, including the bank finance, and some amount arranged by the enterprise. Clear? And some amount arranged by the enterprise through long-term funds. Clear? And some amount arranged by the enterprise through long-term funds, either by the capital or borrowings, called the net working capital. Clear? Called the net working capital. Clear? Called basically what is known as the net working capital. Okay, we will discuss these things more properly when we will discuss question what is gross working capital, what is net working capital. Clear? What is long-term credit, what is short-term credit. Clear? Just here you have to basic understand. Okay, so please tell fast. This example is clear to all of you regarding granules, how the manufacturers will take the money or take the raw materials and how the final product will go to the market. Just you have to understand basic things what they have given here. Okay, now move to the next point here. One more point. What is working capital cycle? Clear? What is working capital cycle? This is the last point of our today's session. So the normal operations of a business. Clear? The normal operation of a business enterprise consists of some or all of the actions. Like first of all, purchase of raw material. If you are purchasing the raw material, then basically we have to process the raw material. Processing meaning that basically raw materials into the useful product. Clear? And conversion of these raw materials basically into the finished goods. And if the goods are to be manufactured properly, then what we have to do? We have to sell these goods. Selling these goods basically on the cash or the credit basis, and receive cash on sale or end of the credit period, and again purchase this raw material. Clear? And again purchase this raw material. Clear? So this is known as the working capital cycle. Clear? Basically this is known as the working capital cycle. Clear? First basically we have to purchase the raw material, and after that what we have to do? Basically we have to process that raw material and put into the basically finished goods, and finished goods basically we have to sell in the market either on the cash or on the credit basis. Clear? That is basically you will get the amount basically after 15 days. Clear? And when will you receive the amount? You will again purchase the raw materials. Okay, in this way the whole process is going to be going on. So that is basically known as the working capital cycle, and the length of this cycle basically depends upon the stock of the raw materials required to be held. Clear? First point is the stock of the raw material basically required to be held. Second one is the work in progress, which in turn depends upon the process involved in the manufacturing and processing the raw material. Clear? How much time basically it will take for the raw material to convert the raw material into the final product. Clear? That is basically the work in progress. Clear? That is basically known as the work in progress. That is how much time it will take. Third one here, that is the credit required to be provided to the purchaser. The credit required to be provided to the purchaser, or how much time you will give to the purchasers. Clear? Basically who will purchase your final goods, how much time basically you will give them, or that is they give payment after 10 days, 20 days, 15 days. That is the credit required to be provided by to the purchasers. So longer the working capital. Clear? The longer the working capital cycle, the more is the working capital requirement. Clear? The more is the working capital requirement. That is the need for maintaining the current assets. So the correct assessment of this cycle is the most important part in the bank's assessment of gross working capital, net working capital, and the bank finance. The assessment of working capital finance by the bank follows the assessment of working capital requirement of the enterprise. Clear? The assessment, basically how much bank will finance. Basically, it will check the working capital requirement of the enterprise. Clear? Basically, what it will check? Basically, it will check the working capital requirement of the enterprise. Clear? So basically, this is just a simple discussion of the working capital cycle. And in the next session, basically, we have to discuss the very, very important, that is Tandon Committee. Clear? Basically, how Tandon Committee basically gives a guidelines basically for the working capital. Clear? We have to discuss in detail regarding the Tandon Committee in the next session, along with 1 or 2 case studies. Clear? So that you are able to complete understand the concept, how to calculate these things. What is net working capital and what is margin, how to calculate the margin. Basically, we have to discuss all the things along with 1 or 2 case studies in the next session. So in this session, we have to discuss up to this much point. Go through once again this session so that you are able to understand all the points. So thanks to all of you for joining this session.